Good evening, everyone. My name is Mark Barnico, and I'm the Executive Director of the University of Chicago Francis and Rose Ewan campus here in Hong Kong. Welcome, Francis and Rose Ewan. I want to welcome everyone for joining us in person and online this evening. It is quite a large audience that we have this evening. Before we begin, I first want to express the University of Chicago's community's heartfelt condolences to the families affected by the Tai Po fires. We also wish to acknowledge all the firefighters and the first responders whose actions protected so many people. Our thoughts remain with all who were affected by last week's tragedy. You're in our thoughts and prayers. Hong Kong is home to the University of Chicago's flagship campus in Asia, a place where our faculty, students, and partners advance ambitious research, world-class education, and deep collaborations across the Asia-Pacific region. The Hong Kong Jockey Club academic complex that we sit in here today and the Francis and Rose Ewan campus is home to the Chicago Booth's Sokolov Executive MBA program. We have many of our MBA students, EMBA students in the audience this evening as well as online. And we have some prospects here as well. So we're excited to have you join the program. This is also home to executive education for the university in Chicago Booth. We have Exec Ed going on this week. We had classes last week here on campus. We also have study abroad on this campus, as well as the Polsky Center for Entrepreneurship and Innovation and the Rostandi Center for Social Sector Innovation. But many of you may not know that we also in this campus have our own podcast called The Course. And it was a project that we came up with internally to feature about 140 of our UChicago faculty who talk about how they became professors. So I encourage you to listen if you like podcasts. We also will be in our third year of our Summer Academy for high school students in 2026. The program is growing leaps and bounds. So you might want to watch for announcements if you have high school age students in the coming weeks so you can reserve a spot. This year, we also created a program called Nexus Asia, which engages our UChicago PhD alumni who are teaching in institutions around the Asia-Pacific region and engages them on this campus. We bring them here, they do workshops, they do symposiums on our campus. So we're excited, in addition to having our own UChicago faculty, we also have our PhD alumni come to our campus, and we call it Activating the UChicago campus in Hong Kong. And then finally, our Trailblazer Forum, that's our signature program. It's dedicated, a dedicated leadership platform that brings senior thinkers and innovators to our campus to share their journeys and their perspectives and ideas with our Hong Kong and Asia community. Tonight, we're deeply honored to welcome one of our own Trailblazers, David Booth. Let me tell you a little bit about David if you haven't already read about him. David is chairman of Dimensional Fund Advisors, the firm he founded in 1981. Under his leadership, Dimensional has grown from an early experiment in a Brooklyn brown house to a global investment manager with more than 1,600 employees and over $853 billion in assets under management. David's a pioneer in modern finance, why we're calling him a trailblazer this evening. He helped create one of the first index funds in the 1970s and launched the first passively managed small company strategy in the early 80s. His career has been dedicated to translating cutting-edge academic research into practical investment solutions, helping define what we now call factor investing. And I hope we can get into some of that this evening in our conversation. David received his bachelor's and master's degrees from the University of Kansas, and in 1971, he earned his MBA from the University of Chicago, a place he often credits as foundational to his later success. His family's transformative gift in 2008 named the University of Chicago Booth School of Business, and it strengthened its leadership in research and education for all of our students and our faculty, and we're so appreciative, David. He's also been a generous supporter of athletics at the University of Kansas. I watched some YouTube videos on that yesterday. That's really an impressive facility that you're building in Kansas. And you did that and developed a lifelong, because you developed a lifelong appreciation for the role of collegiate sports in the building of community. Beyond finance, David is an avid art collector and a supporter of cultural institutions in the United States. The David Booth Conservation Center and Department is responsible for preserving the Museum of Modern Art's collection in New York, which is really very, very impressive. I'd like to hear more about that tonight too, David. So please join me in extending a very warm and enthusiastic welcome to David Booth. Thank you so much for joining us. We're excited to have you back on campus. You were here at the opening.
At the opening, right.
Yeah.
No, I'm glad to be here. I'm glad to be anywhere, actually.
Well, what brings you to Hong Kong this time?
Business. We have a Hong Kong office, and come in and visit some clients and just miscellaneous business stuff.
Yeah. Well, we appreciate you taking the time to spend it with us, with our students in particular. I always like to start with the human side of people like you, to find out a little bit more about like how you grew up, for people who may not know that story, like some of the key influences, early jobs, influential people. I was wondering if you could share some of that with us tonight.
Well, I grew up in Kansas until high school, a real small town, and then we went to high school and college at University of Kansas. High school at in Lawrence. My hometown really is Lawrence, Kansas, where the University of Kansas is located, and so kind of middle class, standard middle class upbringing in the 50s and 60s, and then as I was at that time, my parents hadn't gone to college, but they said, you need to take math and computers. So I took math and computers, and next thing you know, I'm in the PhD program at University of Chicago. So and that's when things really changed for me.
Were you naturally good at math?
See, the way you ask that, it sounds like you're suggesting I might be good at math. So, no, I wasn't naturally good at math, So, I mean, at Chicago, you came across people that were really good at math. Yeah, I wasn't one of those.
Well, you certainly distinguished yourself over these years. So, in these videos that I watched to prepare for these programs, I heard the story about you being a shoe salesman.
Yep.
And I was wondering if you could share that, and what you learned from that, and also being an usher at football games.
There you go. Well, how but as my undergraduate, I had a bit of a scholarship, but I basically put myself through school selling shoes. And I know it sounds odd, but it was really a great learning experience. I sometimes think I got as much out of that as I did out of my undergraduate program. But because you learn a lot about life and dealing with people. And I also often tell the story. One of the videos that around the firm that's watched the most is one that I did when I didn't think I was on camera, and somebody asked about what was it like selling shoes, and I said, well, I learned a lot about myself. The main thing, what I learned was sometimes you just don't have the right size or the right shoe for people, and that's okay. You want to be honest with people, because even though I was a commission salesman and had a big incentive to make a sell, nevertheless, I learned early on that when I went home at night, I wanted to feel good about myself, and it turns out that's a good attitude to have. It helps sales because people realize you're really trying to help rather than trying to push something on it. And that's a life lesson I learned when I started the business, and the reason I think the employees around the firm like to watch that video, realize that we're in the people business. What we're trying to do is help people. We're in the investment business, but we're really trying to, we're there to help people out. And when you tell people coming into the firm, it's okay. Sometimes you just don't have what people are looking for, and that's okay. You know, that's a kind of a different attitude. And I learned that from selling shoes.
I saw you also credited with saying sometimes people really don't know what they want. That's a Steve Jobs thing, but I think you came up with it first.
Well, yeah, sometimes you got to help people and help people along. You know, for example, a lot of times when we sold women's, kids, men's shoes, but sometimes people would say, well, you know, what do you think? Does this look good?
Mhm.
And sometimes it would be awful. And so you learn to say, well, that may not be your best look. You know, you learn how to be straight with people without, you know, hitting them right in the face.
Yeah, we're going to come back to that a little bit when we start talking about investing and your thoughts about investing in retail investing. So we did have some questions from some of the pre-registrants about that as well. But let's kind of walk through your life a little bit and talk a little bit about, I mean, I would love to talk about the University of Kansas. If you have anything that you'd like to say about that, it seemed like it was really a stepping stone for you to get to Chicago.
Well, that's right. I mean, I don't want to make, and that's why I've given money to the business school for academic purposes. I mean, it's mainly for faculty to support. And for Kansas, I give to the athletic program.
Yeah.
So,
No, I think what was interesting is that you mentioned that you actually had U Chicago, people who were alumni of U Chicago were teaching you at University of Kansas.
yeah, that's how I got to Chicago.
Yeah, and they kind of led you down that path.
Yeah, I was, you know, took a finance class and a statistics class while I was at Kansas, and both the professors who were terrific had gone to Chicago, and I go, well, maybe I want to be a professor. And so they go, well, you got to go. If you want to study finance, you got to go to Chicago. So they helped me get into the program.
I thought it was interesting. You said that you thought you wanted to be a professor. Tell us a little bit how you went from wanting to be a professor to then getting your MBA and then moving on from there.
Well, so my first semester, first course, one of the first quarter, I took FAMA's course. It was a 2-quarter course. And then the second year I worked for him. And I worked really hard, you know, and I went home my second year at Christmas time, and we went down to my grandparents, my paternal grandparents, and it's a farming community. I mean, my grandparents lived in a house that didn't have indoor plumbing, you know, had an outhouse, and, you know, the floors are all linoleum, no rugs, you know, that kind of, and I'm thinking, you know, hey, I'm in the PhD program at Chicago. I'm working for FAMA. And I noticed that these people were having fun, and I was totally stressed out. I go, I think this is a life lesson here, that I'm not really cut out to be a professor. It wasn't, I was doing the work, but it wasn't natural. And I enjoyed selling shoes, and I go, and I don't enjoy the PhD program. So I decided I want to apply the ideas. And what was great was, you know, I just came along at the right time. You know, a lot of good academic research was coming down, and it wasn't generally known. So it was a great opportunity to go out and you know, and apply these ideas.
Now, did you spot that opportunity or did FAMA help lead you there?
Well, when I decided to leave the program, well, we have people in the economics department here too, right? So I'd done this paper for Milton Friedman, and it came time to present the paper. I co-authored it with another student. And Milton didn't think too much of the paper. He didn't really criticize it, but he just talked around it. I go, I'm knocking myself out. And this guy is, the thing about Milton, he could argue either side of an argument. He would win regardless of which side he was on. The way Fama says, Milton won more arguments than he should have. And I go, I'm not cut out for this. So I walked in the next day to Fama's office. I said, I think I'm going to leave the program. And he said, well, he had this guy, Mac McQuown at Wells Fargo, that was wanting to apply ideas, particularly thinking about coming up with an index fund, starting an index fund. And so he called Mac, and Mac came in and had dinner with me, and I went to work for them at Wells. So, Fama was very helpful in that.
Fantastic. And is that when you made the jump from Chicago to Brooklyn Brownstone and
No, that was
startup phase, or?
No, we went to work at Wells, and they were, and the program I was working on, eventually, the trust department managed all the money, and we weren't in the trust department, and we irritated the people in the trust department, and finally, they shut my group down. But it turned out to be really, in some ways, the cornerstone for Dimensional. It was a period of time where we were trying to be very innovative in investing. See, what happened was starting before 1960, there was really not much what you think of academic research going on because they didn't have the data. And that changed when the University of Chicago created the first research quality database at the Center for Research and Securities Prices, CRISP. So with that, then all of a sudden that opened up the world for empirical research. And one of the things that was research to begin with and is do professional money managers add any value or not? And the initial conclusions by Michael Jensen, and then every study ever since that I know of said, no, it's once you consider the fees there, they're not adding value. So people said, well, gosh, if they're not adding value, what are you supposed to do? And well, one idea was an index fund. And, but there's other ideas. And so my group, we worked with a lot of leading academics, Bob Merton, Fisher Black, Myron Scholes. In fact, Myron and Fisher, when they were working for us, they started working closely together, and they ended up developing the Black-Scholes option pricing model, which was maybe the biggest development in finance in the 20th century. And then we also had Bob Merton, who had his multi-factor theory that almost nobody understood. So we're trying to do all those, integrate those ideas, but we were shut down. But eventually, a lot of things came together to start Dimensional, and was able to revive that thinking. In fact, Myron Scholes became one of the lead independent directors of our fund. Gene Fama became one of the founders of the firm, and still is a director of the firm. So got to bring back all these people that I was associated with when I was at the university. And because of it in the PhD program, I got to know these guys pretty well. And they rallied around to the idea of what we were coming up with, tried to help out.
That's an incredible story. I always like to try to understand like what some of the challenges were when you start a business like that, and the challenges that impact your ability to scale.
Yeah, well, it's we were starting on a shoestring budget for sure.
And this was before computers.
No, well, they had in fact, we started, I mean, at Dimensional in 81, that, yeah, so, we started basically the same month the IBM PC came out. So I remember, we got one of the first, IBM PCs, and, I opened the box, and the programming language was BASIC, which I hadn't programmed. So it was had to get up to speed pretty quickly to figure out how to program that. And I was our, well, to answer your question, the people that are involved end up having to do everything because you don't have a staff. So I was our systems programmer. I was our portfolio manager. Helped on the sales. It was because we were a brand new firm, obviously no track record, and we had a new idea that was the idea of creating a portfolio of small cap stocks. The term small cap wasn't even used. By small cap means small capitalization, smaller. Our initial clients were all big institutional clients, and they only invested primarily in the stocks of large companies. So we said, look, I think you ought to gain access to small companies rather than just having all your money invested in large.
That almost feeds into my next question, which is related to like, how much pushback did you get from the traditional financial world as you were kind of coming to market and trying to introduce these new concepts?
Well, I mean, a lot of pushback. That was the whole challenge is finding out if you talk to enough people, there's going to be a certain percent want to innovate and want to do the right thing. And so the challenge is, can you find those people and get them as clients before you run out of money and have to close your door? So that was, but we had a lot of success initially. But the trouble was because we were a new firm, people didn't give us very much money. They gave us a small amount of money just to try it out to see if they liked it. So that was a challenge, getting through that period of time where you don't have much cash and and whatever I mean, everything went into the firm.
Did you ever have a moment where you didn't think it was going to work?
No, the challenge was, are we going to die before we before we're successful? It's not like a government agency where if you run out of money, they just send you more. I mean, it's you have to do with whatever you have, and we borrowed. We raised some outside money. It was, and then when we got successful, we reinvested everything. We didn't pay a dividend to our investors in our firm for 15 years. So it was, I mean, it was a lot of fun, but, I think the question people people go, well, wasn't that risky? I go, no, it wasn't risky. I mean, yeah, I mean, there was a good chance we wouldn't have been successful. But in terms of a career risk, I knew I could always get a job, so in that sense, it wasn't particularly risky.
I want to go back to shoe selling. I said I would come back to that. And maybe like how you grew up too, because I kind of face this with my own family, which is how do you think about and how do you articulate to people who aren't sophisticated about investing to embrace investing?
Well, I think one of the things I've been working on the last few years is really drawing parallels to life, the issues you face in life. Investing is complex and uncertain, so is life. And so by this time, everybody here has learned how to deal with uncertainty in their personal lives. And investing is a lot the same way in that the big challenge is, you can't predict things for sure. That's people think you have to predict things or people think sometimes there's an optimal solution to things. And typically in investing and in life, I don't know if there's really an optimal choice. You just have to make the best choice you can, given the information you can. And sometimes it works out and sometimes it doesn't.
One of the things too, I always like to ask people like yourselves is this transition from like founder to CEO to executive chairman and some of the challenges that you had to face kind of in each stage as you evolved with the firm.
Well, as a founder, the big challenge was it takes everything you have. I mean, it's in fact, the first my first office was my apartment, and so you know, basically when I wasn't awake, I was working. I mean, when I wasn't asleep, I was working. You know, maybe when I was anyway, and phones would go off all night, and it was pretty intense. And then all of a sudden you get more people and you actually have to manage. You have to develop a management philosophy. And
you did that.
yeah, so it's, and kind of the philosophy that evolved was heavily focused on getting really bright people that want to play as a team. When you're starting up, it's a solo. I mean, you may have, we had a group of people, but everybody was on their own, and everybody had to do a little bit of everything. But eventually then you have to, you realize that what a firm is about is doing things you can't do on your own. You know, that's why you have a firm. And then you started figuring out what kind of firm do you want to have? And the kind of firm I wanted was something where I wanted to come in and work every day. I didn't want to come in and have a lot of stress and agony and people yelling at each other. So and I wanted to have people to have a good work-life balance, even though as the founding stage, you don't have a work-life balance. But when it looks like you're going to make it, then all of a sudden you can focus on having a good work-life balance, which starts off with locating an office where most people can have a reasonable commute and send their kids to public schools and so forth. And then, you know, when we started, we had kind of regular office hours. I said, yeah, those office hours are there because we don't want you there after office hours. Some people think you have to work hard. I told people, look, I work hard from 8 to 5. And after that, as I got older, I don't have, that's all I've got. I need to go home and rest up. So I was never a workaholic after those first years of the founder years. So you're right saying there's a founder years, then let's call it the middle years, and now I'm in the chairman role, which is mainly I come in every day and point fingers and say, this is the way we used to do things, and you know, you have it easy, we had it tough, and you know, and generally be a pain in the neck to people. So
a lot of people don't make it past that founder stage. They just don't have the EQ to be able to evolve to the next stage.
yeah, well, I've always liked the idea, if I can find somebody else to do my job, I'm happy to hire somebody to do that. And eventually, what I was really looking for, and it took me years to find people that could replace me as CEO. It ended up being two people, two co-CEOs. And when it was pretty clear they could, well, now, I mean, they can do a much better job than I could. You know, the skills you need for startup and management are not the kind of skills you necessarily need for this second generation. There you need professional management skills, and I'm not a very good professional manager.
But it's good, I mean, to be able to recognize what you're good at and then where you need to bring in the help to support wherever you want to go with the firm. I think that's really critical for success. And
Yeah.
values lay the foundation for that.
Yeah, for some reason that reminds me, for the first 20 years, we didn't have an HR department, for example. You get to a certain size, you got to have an HR department, and we rely heavily on it. I think HR is a very valuable function, but it took me a long time to really appreciate that.
But did you have a lot of longevity in the firm with your staff?
Yeah, right. We have, in some ways, one of the concerns we have is people state our turnover rate is too low. Um, because you need fresh faces coming in, and I'm not sure it's a good signal. If you have real low turnover rate, it may mean that you're not aggressive enough or something. I don't know.
Well, you were there in 1981 when technology started to disrupt with the personal computer. A lot of people in the audience online asked if you could talk a little bit about what you see going on with AI. And then if you want to get into cryptocurrency, they'd love to hear your thoughts on that as well.
Okay, well, AI is going to change the world, right? I mean, I don't think, um, and but it's not clear who the winners and losers are going to be. There'll be winners and losers, particularly when you start talking about people are investing hundreds of $1 billions in data centers. I mean, that's not all those firms will be equally successful. It kind of reminds me of the gold rush era in California in the 1850s, you know, when a lot of people went out, looked like, well, it was, and it would turn out to be a big deal. But who made the money? I mean, there were some guys that panned gold and made a lot of money, but very few. The people that really, one of the firms that made a lot of money was Levi Strauss. They sold the jeans to these people. So AI is going to change the world, but it may not be in the high tech. Doesn't necessarily mean it'll be in the high tech end of things in terms of who will make the money. I mean, clearly high tech will change the world, but we'll see who makes the money from all of that. So we use AI in different, you know, particularly menial, you know, the drudgery, reading through texts and stuff, you know. AI can be very helpful. They'll put a premium on people that can take the output from AI and say, yeah, that's reasonable. You still need critical thinking. So we can cover more about AI if you want, but there'll be, and like all technologies, it can be used for good or bad. You know, there are a lot of kind of dystopian points of view about kind of like Blade Runner world. And my guess is that's a low likelihood. I think it'll somehow, if AI is as good as they think it'll be, they'll figure out how to make life better for humans rather than destroy them, I think. But that's just a guess.
And then cryptocurrency, do you have any thoughts you want to share with the audience? Because I know they're going to ask if I don't ask you.
Well, you take Bitcoin. It's not clear whether there's any economic value there. I mean, eventually with blockchain and stuff, you know, things like cryptocurrency can come along and have an economic value because they can make transactions cheaper, for example. It's not there yet, at least with Bitcoin. So we don't have any Bitcoin strategies, and I mean, I don't want to argue that it's a bad investment, but I don't see why it would be a good investment if there's no economic value there. But that makes me sound like an old fuddy-duddy, which is fine because I am old. But
you get the younger generation that's coming into the firm that are sort of advocating for a position in crypto?
Not once they've heard. I mean, they may advocate it from other. They don't come to me with it anyway. And hey, look, I'm wrong on a lot of ideas as well. I could be wrong on that, but I don't like to invest in things I don't understand.
Well, I'm going to shift to the arts because that's a passion of mine as well. And I'm wondering, since you're such a strong supporter of the arts and culture in the United States, how did your interest in the arts actually begin?
Well, you know, I don't really know because I probably was always interested in art, but didn't have any money, you know, at first. And but I went to museums and so forth. And I remember ever getting out of school, one of my first purchases was a poster from MoMA, a Mondrian poster, uh, cellophane or plastic wrapped, that was in my living room. That was my art piece. And I always liked art. And as I got, more successful and I was able to start buying art, it really became a bit of a passion. So the last 15 years, I've been pretty aggressive in buying art.
Can you talk about that just from an investment standpoint as well, and your kind of your thinking about art as an investment, or do you think about it just the pure passion?
Well, I don't, I mean, it's a type of investment that may or may not be a good investment, but uh, it, it brings joy. So it's about consumption. It's one of the rare investments. When I come into my property every day or as I leave and look around, I never get tired of it. I get very excited. So it's an investment that I appreciate every day. I mean, I once knew this guy. He was actually the treasurer at Ford Motor Company. And one of the things he did is he had a safety deposit box. It was full of silver dollars. And every now and then he would go down, just run his fingers through those silver dollars. That seems like a poor way to enjoy your money to me, So I have this great art, and we have a pretty good art collection at the firm as well. And I think for employees, it makes them, hopefully employees feel like we care about them a bit more because we have nice art surrounding them. And I think it's for our clients coming in, I feel more welcome, having the art. I think, and one of the things I did with my gift to the business school was I insisted they spend a big 250 grand a year on art. And we have this incredible art. For those of you that haven't been able to get back to the business school in a while, it's an incredible art collection. And you said you got some of that.
Yeah, I wanted to thank you for that contribution because we get to benefit from the booth art collection here on this campus. And for those of you that haven't walked around campus recently, we just over the summer, we changed a lot of the paintings. We shipped some paintings back to booth and then brought new paintings over. So we get to enjoy a lot of the investment you made in art and making our environment a better place to study and to work.
Right. Yeah, it's one of those things that, you think real business people don't think about art, it's just all bare walls. But no, I think art improves the environment, and I think the purpose of art, one of the purposes of art is to get people to think. And if you have things that encourage people to think, then I think that gets reflected in business.
When you think about philanthropy, and Chicago has been an incredible beneficiary of your philanthropy, University of Kansas, Museum of Modern Art in New York, do you think about it from the things that contributed to your life, education, art, and just the passions in those areas? Is that how you think about philanthropy?
Well, that's part of it. And the other part is paying back. I mean, there are places where I need that help me get along. I don't know how I ended up here, but I had a lot of help along the way, particularly at Chicago. And in fact, when I gave the gift to Chicago, I said, it's not a gift. It's really a partnership distribution because you trained me and all these professors helped me start the business and keep it going. And so it's just really payback. That was for Chicago. For the Museum of Modern Art is more, I think people overlook the importance of conservation when talking about art. So I wanted to, I provided the funding for a conservation center there. So it's just stuff that makes me feel good. I don't do things because I think I have to or I'm supposed to. I do things that hopefully can make a difference somehow that people really appreciate and makes me feel good. That's really it.
Well, we really appreciate it as well. Thank you so much. Before we go to audience questions, I had one last question for you, which is circling back to why you're in Hong Kong. But what are your thoughts about Hong Kong as a finance center and the kind of the long-term prospects of Hong Kong as a finance center?
Well, I'm not an expert in this, but you know, you have all the critical ingredients. I mean, some ways, Hong Kong is the investment banker for Asia. I mean, investment banking kind of flows through Hong Kong. So as long as you don't screw things up, I think it's going to be a great opportunity. And the world needs Hong Kong to be a good investment banking or financial center. Yeah.
I think the recent, as we were talking with Francis and Rose in the green room, the integration of the Greater Bay Area and Shenzhen and the technology that's being developed there is also really instrumental in now helping propel Hong Kong even further as a finance center.
Yeah, right. I mean, it's kind of the center of what's going on, what's happening.
Really
One of
dynamic.
the centers.
Yeah. Well, let's turn it over to audience questions. I think we have people with microphones if you have a question for David. Raise your hand. There's one. We'll try to squeeze as many questions as we can into the next 16 minutes or so because David has a hard stop.
Hi, David. Hey, my name is Mei Chen. I'm a Chicago graduate of 2012. I currently own and run my own investment firm. We invest in public equities mostly and active long-short style. And we invest a lot in the US as well as a part in Asia, Hong Kong, China. I actually want to ask you a question about where the US is heading because Ray Dalio, he has this famous theory about, the changing orders of countries, and he's mapped out an arc, right? A country is on the rise, and then there are a couple of factors that you can monitor to know that a country is in ascent, and then it kind of peaks out, and then it's on the downward trend. And there are several innings to that trajectory, and I think a couple of signs are, for example, internal conflict, and the people are struggling, competing for the shrinking resource, and also turbulent economic conditions and political instability, et cetera. And then the next inning would be the loss of reserve currency status, mounting debt, et cetera. So I want to ask about your understanding on where the US stands currently, whether we're in the fifth or sixth inning of things, and could there be a world that you see that the US dollar is no longer a global reserve currency in the next 10 to 20 years? Thank you.
Well, in terms of the currency, I mean, it is one of the worries. I mean, I'm not predicting anything, but the US has benefited tremendously for being the kind of the global reserve currency. And I hope we don't screw things up so much that we lose that. That's a valuable franchise. The kind of life cycle of countries and stuff is, there's a lot of discussion about that. But at the end of the day, investing comes down to, each individual investment by each individual investment, and somehow, we're really keen on accepting market prices as being good indicators of value. Now, so the kind of the arc of, the stuff that Ray Dalio, studies, and maybe he's good at figuring out, we just, I think that's not something we spend a whole lot of time on, because we just go in every day. Markets are where buyers and sellers come together and try to establish value on these companies. And, to the extent, in fact, some of the best performing companies long-term are those that are in industries that don't grow very rapidly. They just have a high cost of capital. So when you start talking about there may be countries may in decline or whatever, maybe that means the cost of capital of those firms is going up. In which case your investment, it may be a good time to invest. Those are good opportunities if they have a higher cost of capital. But, that's pretty esoteric stuff. And I don't have any data to support any of my concerns there. And that's one of the things I do still remember from my days at Chicago. If you don't have good data, and I don't, then I really don't get engaged in that argument.
Thank you. Another question up here in front.
Thank you very much, Mr. Booth. My name is Jeffrey Wong, and I'm a current EMBA student of the program. So, what's your best advice to the younger generation in terms of career? How we can maximize what we get from the program? And second one would be, what's the best advice you have received, career-wise?
Well, first off, I don't give people advice, so I find it kind of, but I think this is a great time to be in the financial services industry. I think things are changing rapidly, and that creates a lot of opportunity. I think there are, particularly in the wealth management area, there's a huge problem with retirement income, the problems that people are working on. I think there's the opportunity for creative solutions in that area. And with technology changing, so rapidly, combining, computation is getting cheaper and cheaper. And so I think those are some kind of natural areas. The world's always going to need good people to help people manage their finances. So I think it's always going to be a good industry. The usual bromides you get about, look at things that you're good at and that you're passionate about, and, just get stuck in with it, find a good, it's not where you start that's really critical, it's where you end up. So finding places that have potential for growth is always a good idea, but these are things you already know. But just, follow your passion, be true to yourself, figure out what your values are, and live life according to your values, I guess, that would be my advice.
Next question. Right in front here, right in front of the gentleman in the second row.
Thank you, Mr. Booth. Thank you for your insights. I actually have, I'm Feng Liu from AXP22. I have a question relevant to the future of the asset management. So the asset management industry is currently actually undergoing a profound transformation due to the ESG data as well as the geopolitical shifts. So for the the active managers, so what will be the most important source of the competitive advantages in the coming years, and how can a firm like DFA continue to thrive without compromising its foundational principles? Thank you.
Well, I worry about that. I think the ingredients we had for success can go on for generations, which is make sure you're plugged in to the latest in the science. And the research. Make sure you understand the science as well as anybody can understand the science, just like in medicine or whatever. And if you understand that well and you focus on executing well, then then there's a good chance you'll be successful. And that's without trying to predict where things will go. 20 years from now, things will look a lot different. So all you can do is, uh, uh, based on the current science and research, come up with the best investment approaches you can and execute them well and deliver them cost effectively. Over the long haul, you're going to be okay. Um, that's kind of the formula we've had, and I think that's a formula that can last. It's not really tied to any one particular thread. But just, and if other people come up with good ideas, copy them. You don't have to think of the next great idea, but just be, for example, 10 years ago, we didn't get involved with ETFs. And now we're the largest active ETF manager. So you just follow your clients, keep up to speed with technology and the science, and get the best mind you can working on designing, strategies and services. Over the long haul, you're probably going to be okay.
That's a great transition to a question that came in from the audience online. If you brought an AI agent into your team today, so you hired an AI agent instead of a person, what is the one thing you'd most want that AI agent to solve, like a problem that you have within the firm that you think AI could solve?
Well, I guess I'd go, well, actually, I don't, some of these things don't exist. The idea of having a solution probably is a bit strong. But concerns and problems that they could be very helpful with. It's just the overall complexity. We buy 10 or 15,000 stocks around the world, and we have a couple thousand, fixed income obligations. Complexity of that, making sure you get every dividend, making sure you get every interest payment, making sure every trade that you do every day settles properly, and and all the portfolios you manage. That is complexity. Now, I would think that AI can probably be helpful, integrating all those different areas of the firm, and maybe help simplify the management structure.
I love that answer. That's a great answer. Yes. Wait for the mic. It's coming your way.
Hello, I'm Martin Chan. I'm a doctor. I want to be greedy and ask two questions. The first question is, how do you spend your 24 hours in each day? Assuming you only have 24 of them.
Yeah.
You may have 25 because the second question is, would you still recommend someone to get a PhD in finance in this day and age?
Thank you.
Okay, well, that's actually, I haven't thought about the PhD. It's probably more valuable now than, well, I mean, it's a lot more valuable than when I was a PhD student. See, one of the reasons I left the program was when I was in school, getting a PhD, the only reason to get one was to be a professor. Now, if you want to work on Wall Street, it's kind of a good idea to get a PhD in finance. So if you are interested in the kinds of, quantitative research, that sort of thing, I think a PhD is very valuable. What was the kind of the first
24
question?
hours.
24 hours. Well, I try to spend, let's say, 8 hours in sleep, roughly. Not 8 hours in bed. So I don't know how much of that you're really sleeping, but I think it's a good idea to train yourself to, even if you're just kind of laying there. Then I work this is during the week, and then I work, let's say 4 hours, have lunch with my partner, and then I head home, work out for, make a few phone calls, follow-up phone calls from home, work out for an hour and a half, and then get ready for dinner. And then most days try to focus on the perfect martini. Am I getting too much detail here then? And then either read or watch sports. I like to watch sports, or some of the TV series. I watch a little bit of entertainment, then go to bed, and there we are. So it's kind of platonic in the sense that, a lot of physical activity as well as business and socialize along the way. A lot of this is like dinner and so forth is socializing as well.
Thank you. In the back, in the burgundy jacket.
Hello, Mr. Booth. This is Kevin, MBA/PhD from Chicago 5 years ago. I do have a quick question about this artificial intelligence trend. So on one end, everyone knows that it has a huge impact on everyone's life. At the same time, everyone is talking about the AI bubbles. From an investment perspective, I'm curious about your opinion on this topic. Is there truly a bubble, or is there something that we didn't catch, like in this industry and in this investment?
Well, I mean, the whole notion of bubbles kind of introduces a whole series of arguments anyway. But let me approach it this way. I think there's enormous uncertainty as to who the winners and losers will be. Some of these, and my guess is there are going to be some huge losers as well as huge winners. Then the huge losers, people will say, well, that was a bubble. I don't know. I think that we all agree it's going to be huge, and necessarily there'll be winners and losers. And Schumpeter has the great phrase, creative destruction. There'll be a lot of destruction along the way as we get the benefit of the creativity. So there will always be somebody saying that was a bubble. But I don't think so. I just think that's the natural evolution. If you say computers are going to disappear, okay, that was a bubble. But I don't think, we all agree technology is going to be more and more valuable.
Well, that's about all the time we have since David has a hard stop. So I just wanted to take one more opportunity to thank you, David, for coming to the University of Chicago. Francis and Rose, you and campus here in Hong Kong. We really appreciate it. Maybe everybody give David a round of applause. Want to thank you for your generosity to the university and all the commitments that you make to other institutions, obviously, but to education especially. And your vision and your ability to build and also be a visionary philanthropist. That's something that's I think we can all learn from you as an example, and I want to thank you for that. For our online audience, you'll be seeing some slides about upcoming programs. We have 2 programs next week, one with Professor Ken Pomerantz, and then Brian Leader from the University of Chicago will be giving an open talk on Thursday evening. So we have 2 programs coming up, and then don't forget the course podcast. You'll see that. Thanks for everybody who came and joined us online, and for everybody who came in person. Again, thank you so much, David. We really appreciate you visiting campus here.